Hi, I'm Pattu from FreeFinCal, and these are 10 things that mutual fund investors should never be doing. So, I've been talking about information diet, how an investor should start with a specific goal, have a clear asset allocation, and not look for information from Twitter or Facebook or newspapers or blogs, including this YouTube channel or my website, freefincal.com. Just shut yourself out of information diet and from information and go on an information diet, and so these are 10 things that will help you do exactly that. The first thing, in addition to not looking at other sources of information, so the first thing is, do not look at the stocks that a fund is holding, which means that do not worry about what the monthly fact sheet says, or how much stocks in the FMCG it's holding, how much is in the financial services it's holding, and so on. What good will that do? You are not going to have any say over what the fund manager does. The fund manager has got quite a bit of freedom in where he or she can invest within the confines of the scheme information document, and that's pretty broad. You have no idea when they're going to sell a stock. You have no idea what they're going to buy when, and when they're going to buy a stock or sell a stock. So don't worry about things that you have no control over. You can only speculate, and what good will speculation do? Right? If you knew enough to dissect a fund manager's calls and to understand a portfolio, why do you want mutual funds? You can directly invest in stocks, right? So you are paying good money for the fund manager to manage your portfolio, and why do you want a backseat drive? Right, so just let the fund manager do his or her job, and you stay away. Otherwise, why do you want mutual funds? And don't talk about who the fund manager is, what is his or her style, and so on. Again, it's all speculation. And a fund manager is merely an employee of the fund house or the asset management company. He or she can leave any time. Don't get emotionally attached or married to a fund manager. It's better that you do not know who your fund manager is. In 10 years of mutual fund investing, I have no idea who my fund managers are, with the exception of Prashant Jain, because at that time, in the late 2000s and 2000s, entire decade of 2000s, he was a star, and his name was plastered all over the media. So I know that. Other than that, till today I have no idea who my fund managers are. It's completely unnecessary information. You're not going to suddenly they will leave, and then you will start worrying about what will the fund do? Will the fund underperform from the one? Why do you want to waste your time with information that you have no control over? Again, people have asked me about time management. This is how you manage your time. Don't worry about it. Do not look at the daily gains and losses in your portfolio. Do not look at whether the market has moved up or down by this many points, that many points. Don't fall into the trap set by the media to make them make you click their articles. Don't do that. It's useless. It's also immature. It doesn't matter. Some people will complain, "Oh, my SIP date is tomorrow. The market has just moved up," and so on. The market fell down after my SIP date, and so on. Come on, grow up. Grow up. Don't get a hobby. Do something else. Do not look at the comment section of the funds that you're holding at Value Research. It's filled with immature people asking randomly, "What should I do? Should I sell? This is my portfolio," and so on. And it is crawling with mutual fund sales guys. Please, that's the last thing you need. Just garbage comments. Just stay away from that. Do not subscribe to AMC emails. Do not attend any event by the AMC. AMCs have only one goal: to make profits. So they want to send you emails about how good their funds are, whether it is a good time to invest, bad time to invest, they'll send you market outlooks, they'll send you NFO offers, they will call you for their events and talk about what the rupee is doing, what the oil is doing, their new fund offers. They're going to introduce a ELSS fund, they're going to introduce a liquid fund, they're going to introduce a dynamic fund. Who cares? Don't waste your time with all this. fund. Don't try to learn value investing from the fund manager. People go to PPFAS meetings and ask the fund manager, what do you think about this stock? What do you think about that stock? Come on, if you want to learn value investing, attend a course or buy a book. And do not look at star ratings of mutual funds, whether it is Value Research or Morningstar or CRISIL or Money Control, whatever it is, star ratings are plain faulty. There are two reasons you should avoid star rating. Whatever the rating methodology, even if it is correct, the rating analyst is looking at a time period which is different from the time period you have invested in the fund. Therefore, the results will be different. One. The second reason is most, if not all, rating methodologies are wrong. They use numbers like alpha, Sharpe ratio, Sortino ratio. All these metrics are flawed. They are incorrect. They assume that the mutual fund returns fall on a bell curve or a Gaussian distribution, and that does not happen. And all these numbers are wrong. Do not take them seriously. Stay away from all star ratings. It will just make you worried. You will look at a 5-star fund and invest. Next month it will become a 4-star fund. What will you do? You will sell the fund, is it? Next month it will become a 3-star fund. What will you do? You just they are looking at a different time period than you are. So I will I will make a video and write a post on how to review a mutual fund in simple steps tomorrow. Stay away from star ratings. They are of no use. Do not look for answers regarding why a fund is falling down. Investors start speculating. The fund is falling because the fund manager is having too much exposure in this stock, this sector, that, this, and so on. Again, you do not have any kind of reliable information unless you are actually sitting in the meeting of the investment committee, the fund manager and his or her assistants. You will have no idea. Nobody is going to tell you all these reasons. Just useless information. You are going to if this enters your brain, it's going to make you confused. Information diet. Do not look at annualized returns unless you have invested for at least 1 year. Even then, only the first few investments are reliable for annualized return. So XIRR or the internal return, internal rate of return, do not look at that unless you are at least 1 year old as a mutual fund investor. Because returns before that, they are not wrong. Many people claim, I've got 60% return in 3 months annualized. What does it mean? How can you annualize a 3-month-old investment? That's stupid, right? So don't do that. You need to. That's why I keep saying, invest and do not look at your portfolio for 1 year. Look at your portfolio only once a year. Once a year, not at all. No other times. For God's sakes, do not ask people about what to do with your investment. They just write. I mean, people write, I have invested 5,000 in this fund, 20,000 in this fund. What should I do? Is my portfolio okay? Don't do that. That's just irresponsible behavior. You should be a little more responsible and you should respect your own money a little better than that. Why are you asking strangers for random opinions? It's just nonsense. Come on, if you learn how to handle a mutual fund portfolio, which is very easy to learn, all you need to do is to read with a clear focus, or you pay a SEBI registered investment advisor who is a fee only financial planner. I have a list. You can contact any of the people from that list and get professional advice. Why are you asking random people? God, it's so childish. Do not panic if someone else is criticizing your fund. Somebody will say, I have exited this fund because it is underperforming for last 2 weeks. So what? Some idiots do. Let some idiot do whatever he wants. What is your problem? His experience, her experience will be different from your experience. Don't panic and don't look for confirmation of choices. Oh, I have seen that this is a good fund. That blog said this. This blog said this. Value Research said this. Morningstar said this. Why are you looking for confirmation of your choices from other sources? Yeah, I have seen many people say, I have written a good article because I have praised the fund that they are holding. The article is not actually good. That they are just happy that I have said that their funds are good. That's just confirmation bias. Don't do that. You need to Unless you have conviction and clarity about your investment choices, you cannot be a successful investor, whether it is in fixed deposits or stocks or mutual funds or bonds, whatever it is. So these are 10 things. There's one more. Once your goals are aligned and in order, and you have started the investment journey, stop reading blogs. Don't read Free FinCal. Don't watch my YouTube channel. They're useless. You're done. You have started that journey. Somebody else new who is yet to get their money in order. Let them watch. You share my URL to them, and you move on in life. Go get yourself a nice hobby and stay away from money. Money matters. So have information diet as a financial resolution in 2019, and these are 10 things that no mutual fund investor should do. Catch you in another video. Thank you for listening.